The global trade landscape has been shaken once again. The United States, under the Trump administration, has escalated its trade war with China. This escalation comes in the form of new tariffs on Chinese goods. These tariffs are essentially taxes on imports. They make Chinese products more expensive for American consumers. This move has significant implications for both countries and the global economy. The US and China have been engaged in a tit-for-tat tariff battle for several years. This ongoing dispute has created uncertainty in the global market. The latest round of tariffs marks a significant escalation in this trade war. To understand the current trade war, we must look back at US-China trade relations. For decades, cooperation and interdependence defined the relationship. China became a global manufacturing hub. The US was a primary destination for Chinese exports. This fueled economic growth for both countries. China benefited from the American market. Its export-oriented economy flourished. The US enjoyed affordable goods. This kept inflation in check. However, tensions existed. The US accused China of unfair trade practices, including intellectual property theft and currency manipulation. These practices gave Chinese companies an unfair advantage. These concerns simmered for years, periodically flaring into trade disputes. The US imposed tariffs on Chinese goods to protect domestic industries. The current trade war is broader and more aggressive. It is deeply intertwined with geopolitical tensions. The latest round of US tariffs on Chinese goods marks a significant escalation in the ongoing trade war. The Trump administration has imposed a 50% tariff on a wide range of Chinese products. This brings the total tariff rate on many Chinese products to over 100%. These tariffs target a broad range of goods, from electronics and machinery to textiles and agricultural products. The goal is to protect American jobs and businesses from unfair Chinese competition. The administration argues these tariffs address long-standing trade imbalances. The new tariffs are designed to make Chinese goods more expensive for American consumers. The hope is that this will encourage consumers to buy American-made products instead. China has not stood idly by in the face of these new US tariffs. It has responded with retaliatory measures of its own, targeting billions of dollars worth of American goods. These retaliatory tariffs are designed to inflict economic pain on the US and pressure the Trump administration to reconsider its actions. China has imposed tariffs on a range of American products, including soybeans, automobiles, and chemicals. These products were chosen strategically to target industries and states that are politically important to President Trump and his supporters. In addition to tariffs, China has also taken other measures to retaliate against the US. These measures include delaying the approval of American products and investments in China. They also include promoting alternative sources for goods that China currently imports from the US. China's response demonstrates that it is prepared to engage in a protracted trade war with the US. It has also highlighted the interconnectedness of the global economy. This interconnectedness means that actions taken by one country can have ripple effects around the world. Section 5. Impact on Chinese exports. A sectoral analysis. The new U.S. tariffs are expected to have a significant impact on Chinese exports to the U.S. China is a major exporter of goods to the U.S. These tariffs will make Chinese products more expensive for American consumers. This could lead to a decline in demand for Chinese goods. Certain sectors of the Chinese economy are particularly vulnerable to these tariffs. These sectors include electronics. China is a major exporter of electronics to the US, including smartphones, computers, and televisions. These tariffs will make these products more expensive for American consumers, which could lead to a decline in demand. Machinery. China is also a major exporter of machinery to the US, including construction equipment, agricultural machinery, and industrial machinery. These tariffs will increase the costs for American businesses that rely on these machines. Textiles. China is a major exporter of textiles to the US, including clothing, footwear, and home furnishings. These tariffs will make these products more expensive for American consumers. The impact of these tariffs on Chinese exports will depend on a number of factors. These factors include the duration of the tariffs, the ability of Chinese exporters to find new markets, and the willingness of American consumers to pay higher prices for Chinese goods. Section 6. Economic fallout consequences for the US and China. The ongoing trade war between the US and China will have significant economic consequences for both countries. In the US, the tariffs are expected to lead to higher prices for consumers, reduced profits for businesses, and job losses in sectors that are heavily reliant on Chinese imports. The tariffs could also disrupt global supply chains. Many American companies rely on Chinese suppliers for components or finished products. These tariffs could force these companies to find new suppliers, which could be more expensive or less reliable. In China, the tariffs are expected to slow economic growth. China is already grappling with a slowing economy and rising debt levels. The trade war will exacerbate these challenges. The tariffs will make Chinese goods more expensive in the US. This will make it more difficult for Chinese exporters to compete. The tariffs could also lead to job losses in China, particularly in export-oriented sectors. The Chinese government has taken steps to mitigate the impact of the tariffs, such as providing subsidies to exporters and weakening its currency to make Chinese goods more competitive. However, these measures may not be enough to offset the negative impact of the tariffs. The trade war is creating uncertainty in the global economy. This uncertainty is making businesses reluctant to invest and hire. Section 7. Geopolitical tremors, shifting alliances, and global trade. The US-China trade war is not just an economic battle, it is also a geopolitical struggle for dominance and influence. The trade war is part of a broader competition between the two countries for technological leadership, military supremacy, and global influence. The trade war has already strained relations between the US and China. It has also led to a shift in alliances. The US has been seeking to build a coalition of allies to counter China's growing economic and military might. This coalition includes countries like Japan, Australia, and India. China, for its part, has been strengthening its ties with countries in Europe, Asia, and Africa. It has been doing so through its Belt and Road Initiative. This initiative is a massive infrastructure project that is designed to connect China to the rest of the world. The trade war is also undermining the rules-based global trading system. This system, which was established after World War II, has been credited with facilitating decades of global economic growth. The US and China have both benefited from this system. However, the trade war is putting this system at risk. Section 8. Conclusion: a trade war with no easy winners. The escalating trade war between the US and China is a lose-lose situation for both countries and the global economy. The tariffs are hurting businesses and consumers, disrupting global supply chains and fueling geopolitical tensions. There are no easy solutions to this trade war. Both sides have dug in their heels. They show no signs of backing down. The US is demanding that China make fundamental changes to its economic policies. China is resisting these demands. It argues that they infringe on its sovereignty. The trade war is likely to continue for the foreseeable future. It will continue to cast a shadow over the global economy. The best hope is that the two sides can eventually come to a negotiated settlement. However, given the current state of relations, this outcome seems increasingly unlikely. The trade war between the US and China is a stark reminder of the interconnectedness of the global economy. It is also a reminder of the importance of dialogue and cooperation in resolving international disputes.